What's up, Crypto Paradise fam? It's Ian and Nick. Happy Friday. We are back. We've been getting some feedback from you guys. You want to hear alpha. You want to hear how do you make money in this crazy crypto space. Of course, nothing on the channel is financial advice. It's always just our opinions. But we have experience. We have know-how. We want to tell you folks our experiences. So maybe you can learn something, right? So one of the ways that I have consistently found profitable trades in crypto is investing into pre-sales. I know we've touched on pre-sales in the past. We want to focus it on this topic here today in a little bit more depth. So I'll just explain a little quick what pre-sales are. Maybe we can dive into some examples, talk to you guys about some pre-sale platforms like the decentralized Incubator and launch pads and those sort of platforms they like to get involved in the pre-sale world. So with that, I'll just give a quick definition of pre-sales real quick. What this means is investing in a token or coin before it's actually listed and launched on an exchange. So you normally do that by getting to know the team, getting an agreement between them known as a SAFT, and you're entering an agreement there. You're sending them money and they're sending you the promise of these future tokens that they'll give you once their token is launched. High risk, but high potential reward as well. And we'll dive into the topic a bit further here on today's call. But I'm just curious, Nick, when did you first start getting into pre-sales? What was your first taste of it, and what's been your take on them over the years?
That's probably when they were called ICOs, initial coin offerings back in like 2017. And back then it was a little more wild, wild west. As we've gone through cycles, things have kind of developed more. There's more options. So right now, the safest way to do these is either through an IEO, which is an initial exchange offering. So an exchange that you're on, like a Binance or an MEXC or a Gate.io or a KuCoin, not Coinbase, but the other ones, they'll actually get some of these tokens and they'll sell it to their users and holders of their token at that discounted pre-sale price. And also, if you're getting an initial exchange offering, that they will be listed on that exchange as well, which brings more eyeballs, more volume, and hopefully price appreciation. The other safe way to do it now that it's developed from this ICO Wild Wild West, is through just an incubator like TDI, the decentralized incubator, to get in the seed round or the private round or the strategic round, or you can get in the public round with launch pads. These are platforms in which if you hold a certain amount of their tokens, they give you allocations of these pre-sale projects that they've done their due diligence on, that they're vetting, and that they put KPIs on to help protect some of the investors.
Yeah, I'm glad you mentioned the sort of history of it. I first got a taste of it. I came into crypto around the time of the ICO craze in 2017, but I never got involved with an ICO. Apparently, how that worked then is projects would just have this sort of address up on their site, and you would send them money to that address on their site, and they would, I guess they would send you tokens at some point, or the token get listed on exchange. So I don't know the logistics of how that would really work,
Yeah,
but
Yeah,
a lot
back then, a lot of those ICOs essentially was like that. They would create a website, they would create a white paper, and they would have an address up there, and there'd be a countdown timer, and it'd be like, "Hey guys, you got 24 hours to send funds here. Here's the project. Here's the idea. Here's the white paper. If we raise X amount of dollars, we're gonna get on this exchange and do this. If we raise X amount of dollars, we'll do this and this." So it was Wild Wild West. Now some of those you made massive gains because it was the Wild Wild West. Valuations were cheaper. Nobody really knew about these things. Those very short investment periods. But at the same time, a lot of them are just straight up scams. Somebody would take a day to build a website, generate a MetaMask wallet in about 5 seconds, put it up on the website, and you're hearing about everybody making all these gains in ICOs. You would send some funds, and then that project would never exist. You'd go check on that website, and it would show you a 404 error the next day. So that's why it is nice that we have progressed a little bit. There is opportunities for the average person like you watching this show, to get involved in some of these pre-sales. Now, that does dampen some of the returns on the short time frame because valuations are higher, vesting is higher, and more people already see and know about the project. But it also protects you from the straight up rug that we used to see a lot in the ICO craze.
Yeah, and that's not to say that pre-sales or investing even in launched tokens or coin in crypto is a risk-free endeavor. It's highly risky regardless, but there are some more guardrails now. It has definitely evolved. I want to touch on a couple core concepts so the viewers understand a little bit about the basics. Because you mentioned the term vesting, right? You mentioned valuations. These are key concepts to understand if you're going to dip your toes into investing into pre-sales. So the things you want to look at when making a decision outside of the fundamentals, right? You want to obviously when we did videos about the team and the token utility and the product and all that, all the stuff related to fundamentals. Here, I want to talk about things related to valuation and vesting. That's very key to understand because you invest in one of these pre-sales, you're not, and you send them $500, whatever, $1,000. You're not getting $1,000 worth of tokens back on the day that they launch. Maybe you're getting 10% of that, 15, 20%, maybe 25% max back that first day. And then for a set period of days or months, your tokens will be vesting to you, meaning you can claim a little bit or they'll send to you every day. And then maybe after 3, 4, 5, 6, and sometimes we see 18, 24 months, depending on the kind of project and the vesting terms it has, you'll eventually finally have gotten all your tokens that will equal that $1,000 worth. And so you have to look at these things, you have to understand these things, you have to understand the market dynamics of how things normally go when a project first launches. Typically there's a lot of hype. It's okay, new people coming in, they're excited. Day the project launches, usually see a spike in volume and price and excitement and blah, blah, blah. And then sort of things start to trickle out and trickle down and people lose interest a little bit. A new shiny object pops up, a new token pops up, they rush over there, a new meme, whatever, and the token starts to retrace, but you don't have all your tokens yet. So to understand vesting and the importance of vesting, that's extremely important. Normally, we're only looking for things, frankly, with shorter vesting. And my general thesis being that this bull run that we're in is not going to last forever. And the last thing you want is to be getting vested tokens to you in the next bear market because everything will crash 90 something percent by then, no matter what. So keep in mind the vesting. You want to keep that really as short as possible. And the other thing is the valuations, right? What price of the token are you buying in at? What price is the token going to launch at? And then what's the expectation of where it can go from there? That's another key thing. So Nick, talk to me about some of that. What kind of valuations do you look for? What are your thoughts on valuations in general?
Well, I mean, valuations are always tough because it's really sector dependent and then what the project is going to do as far as deploying capital. But really, the lower the FDV, the better. FDV means fully diluted valuation. This is another thing people get tripped up with is the circulating supply or the valuation that you see, the market cap that you see maybe on CoinGecko. You need to look at the FDV because that's if all of the tokens were in circulation, in circulating supply, right? If all the tokens by the time they're all released, that is the value of that project. And that's where what you were talking about with the vesting, that matters. How long until all those tokens get into circulating supply? If it's a shorter period of time, you might have more selling pressure. If it's a longer period of time, you probably have less selling pressure and you can jump into this project. But what you want to see is you want to see a lower fully diluted valuation because that gives you bigger upside targets and each sector has higher targets to look for. And then you want to look at the delta between, like Ian said, what price are you investing in and then what price is the public price? Because that gives you a buffer, a window, a zone of profitability before you start finding yourself in red after putting your capital on the line for a yet to launch project. I like to look for at least a 2, 3, or 4x from that launch. So if we're getting in at a penny, I would like to see the project launching somewhere between 2 to 4 cents. That's a good delta. That's a good barrier of margin there. And you have the possibility at launch, if the project does well in the short term, even though you're only getting 10% or 15% of your tokens up front, maybe you could sell those to recoup your entire investment. And then you have 80, 85% of the tokens to come that you can hodl and stake and use on the product that you liked so much. So that's what I'm kind of looking for. I don't like to invest at a penny and then it's launching at 1.1 cents and you only have a 10% margin. If that's the case, I'll just wait to try to buy right at launch, or I'll wait till the pump and dump and consolidation occurs and buying that consolidation. Me giving up my capital has an opportunity cost. And if that opportunity cost is I'm only getting a 10% edge over everybody else, that's too high for me. I need 100%, a 200, a 300% edge over the rest of the public market in order to give my funds before the project is really launched.
Yeah, I like that. People need to understand that during the vesting period, everyone who's invested into this project is going to be getting tokens, right? From this pre-sale that they bought into. And oftentimes they are selling them. and you get enough sellers, you get more sellers than there are buyers, the token price is going to go down. And what you saw him see on these low caps is going down almost becomes a self-fulfilling prophecy because people see the chart turning red, they get scared, they start selling, and it's just sort of this downward trend march towards zero. So you got to be very careful and first of all understand what you're getting into with these pre-sales. They are high risk, and then you have to look at the valuation. What valuation you get in? I don't like, unless you're talking about a major infrastructure project, an L1 or L2 that's going to get listed on these tier one exchanges like a Binance or maybe a KuCoin or something like that. When you get top of these small caps that are just going on to like your Uniswaps, PancakeSwap, decentralized exchanges, you can't, especially in this market period right now. We're kind of in this period of the bull run that's kind of bearish, right? Things are really not going crazy. There's not a lot of retail buying tokens, whatever. We're sort of in this bearish period. You can't be, from at least my standpoint, it's dangerous to be investing in these really high valuation projects. That's a recipe for, frankly, a loss on that
It's
project.
much easier for a low valuation project to weather the storm of pre-sale sellers and build up that valuation over time based on their idea, their product, and their business than it is for somebody to launch out with no product at a 50 million, 100 million valuation. And now people are looking at that. You're getting your tokens. They're like, wow, this thing is valued at 100 million. They have no product yet, and I can maybe stake my tokens, and that's it. Maybe I should probably sell this. So then, of course, the market is going to properly price that asset, and you're going to have a slow drip to the lower prices. And then maybe when you get to 10 million, 20 million valuation, that's when people will stop selling because now the market priced you properly versus the other way around. So that's why I always say look for small valuation projects that are raising enough funds to have liquidity, to have some marketing, to have some exchanges. But also, you mentioned it a little bit, and know what you're investing in. Believe in what you're investing in. See the fundamentals, how they can play out over the long term. I think a lot of people in pre-sales, and we're seeing this in launch pads, and this is, kind of a griping point for me, just want to get into whatever, the shiny object, let it do a 5x, dump it out, sell all the tokens, move on to the next. Now, in the super bull market times, that works. But now a lot of these launch pads are offering refunds and this and that. Guys, if you're going into investment, you need to do some research, know what you're investing in, have some conviction in it. Because in the real world of investing, in any other place, you're not getting a refund on an investment no matter what. So you can't go in with the mantra of, I'll just put 5K in, and if I don't like the launch, I'm going to get a refund. That's just not going to work over time. That's going to give you a skewed vision of how to properly invest and do research into projects. And now you're going to fail across the other investments that you make in your life and in the broader scope of crypto, because pre-sales is a very small section of this crypto investment policy. So understand what you're investing in, have conviction, understand why this valuation is so low and why it can go up. And don't just be trying to jump from shiny object to shiny object. Sometimes it works, but a lot of times you're going to be left behind or you're going to panic sell at a low because you don't understand the project. So the first sign of volatility, you're going to panic out, and that's going to be a local low before the next new all-time high happens. And I see it happen all the time. We're seeing it happen with some recently launched projects, and those people are already being left behind. They opted for refunds, and now the price of that asset that they asked for a refund because they didn't know what they're investing in is up 150% in 2 days. So the opportunity of them to make all those gains, they forfeited because they panicked and just invested in the next shiny item.
Yeah, that's another key point. You have to do your research. You have to understand where you're getting into. It's amazing to me how many people who are coming in from the launch pads, or even something a little bit more sophisticated and exclusive, like TDI or other sort of seed stage or private stage investment platforms, are not even in the Telegram chat, are not even following the Twitter of the project that they're investing in, let alone having asked the tough questions of the founder of the team. Hey, what's your token utility? What's the plan for profitability and how are you going to bring in revenue? How are you going to survive long term? How many people on the team? What's your burn rate? All these questions that I think every investor should be asking of every project they invest in. They're not even doing those basic things, and maybe it's due to the refund, maybe it's just due to simple negligence. But if one other takeaway you can take from this is you got to do your research. You got to understand where you're getting into, and that's whether that's crypto or that's real estate, stocks. Understand what the heck you're doing, and you'll have a much better chance of doing well. So I want to talk a little bit about the various platforms that one can use to get into these things. So we touched on launchpad. Launchpads are normally reserved for the public sale round, which is the final round of the pre-sale, right? Pre-sales normally split into 3 or 4 rounds. You can have seed round, say private, and then a public, right? So launch pads, examples would be like your chain GPTs, Republic cryptos, like a big one that a lot of people know about, more a little bit more mainstream. Seedify, they're big into gaming, on and on. There's plenty of them. Then, if you want to get into the seed or the private realm, you normally have to either be a venture capitalist, a VC, or part of a syndicate that gets these kind of deals, or part of a platform that gets these kind of deals, like a TDI decentralized incubator. And how that works is sometimes you have to hold a token, like in the case of TDI, you have to hold a stake a certain amount of FRM tokens, FERM tokens, to get into these deals. The more you stake, the bigger allocation you get. Or perhaps some of these you don't even require necessarily a token. There's no token involved, and you just can opt into deals. But one thing that again, back to the due diligence thing, all these platforms, whether that's a launchpad or syndicate or whatever, yes, they are vetting things out. Yes, they are speaking with teams. Yes, they are doing due diligence. Some probably better than others, but that does not absolve the individual investor from doing their own due diligence. Just because I like something or Nick likes something or the founder of ChainGPT likes something doesn't mean you have to like it or you do like it. The only way to understand whether you like something is actually to look into it or not. Do your due diligence. Try to get to know the team. Try when we've had plenty of videos where we talk about due diligence. So I won't dig into that. But people I think have this sort of fallacy like, oh, well, I got in through a syndicate, I got in through this group or this launchpad. It must be great, or it must. That's not always the case, and people need to understand that simple fact. So, Nick, I don't know if you have thoughts around, different platforms, different
Yeah,
processes you've seen, which ones you like, which ones you don't.
I think for the average beginner, if you're brand new to crypto, look and see what if your exchange does IEOs, like initial exchange offerings. Why? Because there's gonna be a listing there. It's gonna be super easy. You can use your Bitcoin to buy it. They do a lot of due diligence for you, KPIs, whatever. But if you're anywhere more towards the intermediate to advanced, or you're trying to progress in crypto and you're trying to make real gains, we need to get you with the MetaMask, and now you need to get into these pre-sales. Now, personally, I'm going to do a little bit of a shill because we work with the decentralized incubator and we get you in seed rounds and private rounds. So what that means is sometimes you invest a little bit earlier, maybe a week, maybe a month, maybe 5 months earlier, depending on the round, but you're getting it at much cheaper valuations. You're getting much more inside information, behind the scenes access to the project's teams and the founders and what their plans are actually going, so you can prepare accordingly. But on top of that, a lot of these launch pads really don't have you guys at heart. They just don't. I mean, they're offering you a refund. That's great. But you know what they have at heart? They have at heart money. When you invest, they keep a lot of that money. They charge the project a lot of that money. So they're doing minor due diligence, but I find that their due diligence isn't very good. Really, the due diligence is standard black and white KPIs. They say, all right, project B, we need you to raise $2 million. You need to allocate us 500,000. We're going to take 15% off that off the top. And then we need you to list on KuCoin because we get a referral fee, MEXC because we get a referral fee, and you need to partner with this project because we get another referral fee, and then we'll take you on board and we'll show you to our group. So, not going to name names. All the launch pads are different, and some of them find winners because the projects are still solid, but understand that it is a player versus player world. I find that the syndicates or these VC groups or these alpha groups or decentralized incubator, they have much lower fees, and they're not doing due diligence based off nonsensical KPIs or painting every project the exact same. We're looking at a project, we're figuring out what sector they're in, and we're trying to decide what is going to work best for that project, building relationships with those team members so that everybody can win and the project isn't just a pump and dump. It's here for cycle after cycle. So I think the opportunity is in a decentralized incubator or other syndicates. And since you know a lot about the decentralized incubator, maybe you can go into some of those details, Ian. But for those of you who are looking around, scouring Google, scouring crypto Twitter for where to invest in pre-sales, I would urge you to look for an alpha group, a syndicate, or a decentralized incubator versus trying to go all in with some of these launch pads.
Yeah, that's a good point in terms of the interest maybe diverging. between the launch pad and the participant. That's definitely a true statement. For a lot of these incubators, decentralized incubator included, the benefit there is the incubator is typically working with that project from an early stage and set in experience in the industry. Like we have a lot of experience in the industry, obviously, and we're helping that project set up their token economics, set up the token utilities, or brainstorming them, solidifying them. We're helping them with introductions to exchanges, to market makers, to potential partners. We're giving them ideas on marketing. We're helping them with marketing. We're introducing marketing agencies, key opinion leaders, influencers, whatever the case may be. So really helping to ensure, and normally in most cases investing along a lot of these syndicates are investing alongside everybody else. So interests are all aligned. You know what I mean? Whereas Launchpad, that may or may not be the case. So interests often the case usually aligned, and the incubator is usually helping steer the ship, right? Now it's again no recipe, no guarantee for success. Everyone still needs to do their own due diligence, ask their own questions, decide whether they like it or not on its own merits. And if you don't understand something, you probably shouldn't be getting involved anyway. So all that being said, something like a decentralized incubator, syndicate, whatever, it's a little bit more hands-on. I think they're putting a little bit more effort behind it, and hopefully the results show. Now that's not to say that the results always show. There's always winners and losers, and you can think something's best thing since sliced bread. And it turns out the market just didn't respond, or turns out the team made a series of errors, inadvertent errors. Oh, you know what? They decided to launch on chain B, and that chain was hot 2 weeks ago, but now all the TVL and volumes have moved off that chain, and now they're on chain C. It's like crypto's crazy like that. So there's no guarantees, a lot of risk across the board. But I think all things being equal, it's nice to be a sort of associated with one of these syndicates or incubators that's really putting a little effort into it, I would say, relative to launch pads.
Yeah, and then also on top of that, you're usually getting at a better price round. So, like we said, seed round would be the cheapest, then there's private round, then there's public. Although you might have to invest a little earlier, that gives you more buffer space to the launch price, more potential upside, and does limit a little bit of the risk as far as price performance is concerned.
Yeah, a good example of that. So, a project that we've been closely involved with and advising for a long time. We've talked about it a number of times on the show, called ArcX, just launched earlier this week. And it's been a bearish week. The launch was a little rocky. They were slightly late on adding liquidity. I mean, it wasn't the smoothest launch in the world. I think it did a 2x initially, but then sort of there was a retracement as pre-sellers start to sell. But then good news starts to come out. They release their app. They onboard influencers. Word starts to spread around this gem. But the fact is that TDI participants got in the seed round. And granted, that investment occurred probably 4 or 5 months ago, so it waited a while. But even with mediocre performance on the token, although it's doing better, even the mediocre performance, I think it's like 4x right now from seed, something like that.
Right now at this time, the seed people are up 8x.
Hey,
The private people are up, I think, 4 or 5x, and then the public people are up about 2.1x.
that's great. And this is not even a good market right now for altcoins. So if you think about like mediocre, like things did not even go that great. But because the valuation was so low when that investment occurred, those people still did well. So, and that's not to say it happens every time like that. ArcX, I think, is going to be a big winner. It's got a lot of room to run. It's still a sub 1 million market cap, strong fundamentals, great team. We talk about it a lot. So still room to go. But even mediocre launches, if you're in low market caps, can kind of counteract a lot of that. You can still do halfway decent.
Yeah, I think and that puts in perspective the potential X's that you could get by investing in syndicates versus potential launch pads versus the IEO. Remember, the IEO would be at launchpad price, but even stricter KPIs, and you need to have their exchange token and different things. So usually when it's an IEO, you're not getting the best deal, but you're kind of getting that security with it being tied to a gate or a Binance that there's going to be at least that exchange listing, the token will launch. So you can kind of see with these pre-sales, the less risk you want, that means the worse price. that you're going to get and the higher valuations that you're going to get. So if you got to take a little bit of risk, you got to find a syndicate you like, whether that's decentralized incubator, which is tied to Ferrum Network, or a different syndicate. Find those that you trust, that you think can steer the ship, and get in those early valuations. And let's see how these projects progress moving through the cycle. Again, you did touch on it. We were looking for short investing. We love the bull market. I'm even here to say I think this will be the longest bull market in history, but that still leads you to maybe the end of 2025 or 2026. So you need to have your tokens. You need to be able to use the products. You need to be able to stake and earn the APRs. So ultimately you can take some profits before the inevitable bear market. That's why we don't like the vesting being so long. And that's why as you're investing in these pre-sales, the later and later you get in the bull market, you got to be more and more strict to what you're putting funds in. How delayed is the launch going to be? Because you, like Ian said, you don't want to have this amazing project, but they're launching on the end of the bull market. And now you got to really stick with them, weather the storm for 1 year, 2 years, 3 years before the next bull market really starts.
Oh yeah, I can't tell you how many opportunities we've turned down because we get pitch deals all the time. We're in VC groups and other syndicate groups, and we get pitched all the time, sent decks all the time that have extraordinarily long vesting. Small amount at the time of the launch, maybe 5% of the time of launch, then a 3-month cliff. So that means 3 months of you don't get any tokens, and then 24-month vesting period. That's common, honestly. We're trying to select those that are much shorter than that for the reasons Nick stated. The other thing about pre-sales and investing in general, in life in general, it is so much about timing. So we've been doing this for, I've been in this space for like 7 years. We got into pre-sales probably 4 or 5 years ago. So been doing this a long time. And one of the things I've noticed consistently is that the projects that I participated in, pre-sales I participated in the early phase of the bull run, they all did great. And whereas the projects halfway through and towards the end did terribly. So, and that's even sort of irrespective of the quality of project. There were a few projects that we invested in the last beginning of the last bull run that didn't have a product, but still, just because in crypto, when Bitcoin goes up and Ethereum's going up, that tide lifts all boats, and alt season comes and everything does a 10x for no reason. Some things do 100x for no reason. And, so the timing is absolutely critical. The good news from my standpoint is we're still in the beginning phase of this bull run. And I think there's probably maybe another year to go of good times, I would hope. But there is going to come a time in this bull run where everyone's, oh, made so much money. Oh my God, we're all so rich. And you kind of keep investing in the next deal, the next deal, the next deal. The valuations, meanwhile, are getting higher. The vesting's getting longer because the projects can get greedier. They know investors will invest no matter what. And there has to be a certain time when you say to yourself, all right, I'm out. I'm not investing. I'm not saying you pull everything out of the market. That's a decision. We can make a video about that topic another time, when to pull everything out and where to reinvest, whatever. But just to stop pushing these pre-sales, because there comes a time when, because that vesting, if that lasts for a long time, you're going to be getting the bear market and you're going to lose pretty much all your investment, which happened to us often as well. So when we talk about risk, that's what we mean.
Yeah, that's awesome. That's good to know as well. If you guys want more information on pre-sales and how to get involved, leave a comment in the comment section below. We'll try to answer those. Also, you can go to the Decentralized Incubator, or you can go to Ferrum Network to learn how you can become part of that syndicate. Simply by buying FRM tokens and staking them, you are in the family to get allocations for the most hot upcoming pre-sales that we will be helping, advising, and launching within the TDI community. That's a little bit of a soft shill. There's other syndicates, like we said, other VCs, other launch pads. You can do whatever you like. All I can say is that if you're watching Crypto Paradise, you like what me and Ian are saying, we're two of the brains behind the Decentralized Incubator who are helping select these pre-sales, and hopefully we can all make a lot of money during this crypto bull run.
Thank you, Nick. I love it. Not financial advice as always, but you know where to find us. We'll have some links down below. Well, I think that about wraps it up. We'll do more on this topic because I think it's a fascinating topic. We know a lot about it. But hopefully that was a great primer for you guys. I hope you all have a great weekend, and we will see you on the beach. Peace.